Okay, so next we're going on to Chris Lustrino from KingsCrowd. I think of KingsCrowd as the S&P of crowdfunding. Chris may not say that, but it really is a wonderful resource for providing data, information up to date to allow us to understand where our trends are going and how this industry is growing. So without further ado, Chris, come on up.
No problem. Hey everyone, as I'm waiting for us to get the clicker over here, just as he mentioned, I actually would absolutely say we are the S&P. I also use Morningstar, Bloomberg, really whatever resonates with you. We are the data investment research company for the industry, and we've been doing it for over 8 years now. So we've been here pretty much since the beginning, and we've backfilled our data to the beginning. So today, my goal will be to give you kind of an overview of where we've come as an industry. We've come a long way, and there's a lot to be proud of. Also talk about the evolution of the space and what we're seeing, not just from a data perspective, but also from a qualitative aspect. We'll get into the challenges that we do see. It's not a perfect industry. We still have a lot to work on, right? And then where the opportunities are for us to continue to grow as a business. So really excited to have the conversation with you. Good question. This year, if you look, so I'll be very specific about kind of our data coverage. Our data coverage is pretty much 100% of Reg CF and Reg A equity and debt offerings in the United States for operating companies. So this is not going to involve things like Fundrise Reg A's for real estate, ground floor Reg A's for real estate, fractional, collectibles, artwork, all of that stuff is not in here. So this is focused on operating businesses. But as we'll see when we get the data slides up, there's literally, we're going to pass the $1 billion mark this year for dollars raised via Reg A and Reg CF into equity and debt offerings in private companies in the United States, which will be the largest year we've ever had on record. So the answer is yes, and I think that's pretty exciting. Yeah, please. Good question. So yes, that is also growing, and we'll get into that in a second. We've had over 1,400 raises this year, raising capital. So the number of issuers each year is growing. And it's pretty interesting to see not only are they growing, the average dollar size or raise amounts are growing. There's a lot of very interesting trend lines up and to the right, which is pretty cool. All right. There we go. Beautiful. Thank you, Devin. His superpower is tech. Or good, either one. So yeah, as we're kind of hitting on, you'll see over here, right? This is year to date 2025. We're just under the $1 billion mark. I think this is the year where we could actually surpass $1 billion raised via Reg CF and Reg A, which I think would be a really big deal. We should definitely have a clock counting down the dollars till we hit the $1 billion mark. That's nothing to slouch at, right? How many venture funds out there are $1 billion funds, right? This is a big part of the private market capital stack, and I think they're doing some pretty incredible work across the industry and a really positive sign for where things are headed. So one of the things that I want to hit on, right, is how the crowdfunding market is evolving. There's a lot of perceptions about our industry that little by little are changing, but there's still a lot of work to do, and I kind of want to highlight where we're seeing some of those changes. So crowdfunding is not just an early stage anymore, or early stage market, right? Yes, there are a lot of day zero companies, as I put them, right? Ideas on a piece of paper, just have a pitch deck. That is a big part of the market. But there's also companies with $1 million, $10 million, $50 million, $100 million, $300 million in revenue and prepping for an IPO. So there is a wide breadth of companies in this market, and we need to talk more about that. Crowdfunding is much more than just consumer products. And again, we'll get into each one of these. So I'll just kind of glance on up here. But people think this is just like Shark Tank ideas, and that is simply not true. And the data spells that out. Negative selection bias is something that I hear time and time and time again. I'm pretty much at the point where I just want to hang up the phone if someone says that, like, you're not interested and I don't want to talk to you. But the reality is we have to talk to those people because they have a feeling and we need to change that feeling and help them understand that's not the case. And we'll get into that. The capital raising ecosystem is evolving. This one I think is probably one of the most important things. The marketplaces, we need them, right? We need the deal makers, we need the we funders, we need the Republics, the Start Engines, the Net Capitals, but we also need the ecosystem pieces around it. How do we actually get money into these deals? We need capital raising support providers, and we're seeing way more of them pop up, some of them that are in the room today. Crowdfunding capital drives real growth. People think, oh, you put your money into these things and It's not actually helping anything. These are grifters just, grabbing money where they can. Well, I'm going to show you some examples of the amazing companies that are building in this space. And exits are coming, but it's still early. I think there was a time where exit timelines were 5 to 10 years. The reality is, you just see the IPO markets, right? People don't exit. It's 10 to 15 years, in some cases, 20 years. So if we're being realistic with ourselves, we are getting to a part of the market nearly 10 years in where we're just starting to see those exits come. And I think in the next 5 years, we'll start to see a really nice flow of exits occurring all the time as the market continues to mature. So just hitting on that, the main stat that I want you to get from here is that nearly 26% of issuers have between $500,000 and $100 million plus in revenue that are raising via Reg CF and Reg A. So again, this idea that every company in this space is just an idea on a piece of paper is simply not true. And the data spells out that like a quarter of the market, and if you look at the dollar volume going into those deals, it probably makes up nearly half of the market is later stage deals, companies with $1 million, $2 million, $5 million, $10 million, $100 million in revenue. And I think that's a really great thing because these rules can work for a wide breadth of companies. And that's really powerful because the entire private capital market stack needs support, and Reg CF and Reg A are providing that support. The other thing that drives me absolutely nuts is this idea that everything is just like a Shark Tank idea. And, I'm sure it's just food and bev and it's just breweries. And, that's not going to be a good investment. And like, tired of hearing that. Yes, it is true. It works great for those things. It does. But actually, investors in this market are looking for much more than that. Look at the top 5 categories this year. Real estate has raised $160 million. SaaS has raised $99 billion. Healthcare has raised $70 million. Transportation has raised $66 million. These are the top 5 categories. Do you see food and bev there? No. Do you see consumer products there? No. The reality is investors in this market, yes, they're crowd fans. They love what they're doing. They're community people. That's great, and I love that aspect. But the reality is the investors in this market that are driving real dollars into these deals are investors, and they're looking for returns. And they want to invest in things where they see return opportunity, like SaaS, right? Where they know venture investors have made money for tens and decades, whatever you want to say. So anyway, all of this is to say is this works for much more than just a consumer product, and we're seeing that spelled out in the data. Constantly, I hear that, this industry is full of bad companies. None of the companies in this space are any good. And if you could raise venture money, you would never raise from the crowd. If Andreessen Horowitz, the best investor in the world, technically, right, in the venture space, has backed 2 companies that have literally gone on and had some of the most successful Reg CFs of all time and has supported that, has been a proponent of that, has written about the Reg CF industry, thinks it's a good thing, then I think everyone else just needs to fall in line, right? Arrive has raised from the Bezos family office. Picasso just had one of the most successful Reg A's of all time. They raised almost $75 million. You're backed by Greycroft, Maverin, Fifth Wall. These are some of the biggest names in kind of the venture and private equity ecosystem. And they're saying, yeah, there's a value to doing Reg CF and Reg A. And then we're seeing the capital support stack, right, build around us. Capital Department, Maverick Brands, Potomac Growth. A lot of these guys are in the room today. Please go and meet with them. These folks are the ones who are helping to create sophisticated strategies around how to actually raise capital from the crowd, whether it's top of funnel, running Facebook ads and Google pay-per-click, to email funnels, to how to engage your community, to how to do really good ongoing IR to re-engage folks to come back for future rounds of funding. All the tools around our ecosystem are being built to really help founders be successful. And this is going to be a very powerful piece of the next evolution of our industry, is actually having capital raise support providers. And then we're just starting to see those exits come along, right? And it's low and slow. Don't get me wrong, it is. But we're starting to see some really interesting examples. So just give you a few. Nevo, they did a round at a $12 million valuation on VFunder in 2020. And a year later, quite literally a year later, they sold for $50.4 million to Logitech, right? Logitech's a real company, a 5x exit in a year. I think a lot of people would take that. Beta Bionics, they were one of the first companies, and I think this is perfect, right? May of 2016, so we're just about a decade in, and they IPO for $1 billion. So that tells me that if you give things 10 or 15 years, you're going to start to see more stories like this. And then Revolut is the best crowdfunding example to date. To be clear, it was out of the UK. They raised on Seedrs, which is now owned by Republic. But the reality is their investors are up 645x on their investment, and folks have already had an opportunity to sell a portion of their shares last year at like a 500x in their last secondary sale. So, are there good companies in this market? Are there returns to be had? The answer is absolutely yes. And then I'm not going to go into these in too much detail, but here are 4 companies that we track. Either we've invested in them or we know them really well, who have done multiple rounds of funding in the Reg CF or Reg A space. Just like at Shift Post, right? When they did their first round of funding on crowdfunding, they had $37,000 in revenue. Last year, they did $14.4 million in revenue. If you look at Liquid Piston on the bottom, they've done $50 million plus. They're like a deep tech company. They've done a lot of really interesting things. $8 million in revenue is solid, but what they've built, the technology they've built, how they're working with the Department of Defense is really impressive. And these are companies that are really leaning into crowdfunding as a main mechanism by which they're growing their businesses. And I think there's a lot to say for that. Nonetheless, there are challenges, right? There are challenges in this market. There's still capital raising struggles, especially for very early stage companies who don't have the resources to work with capital raising providers. There are still reporting issues in our industry. One of the biggest turnoffs to our space is founders not providing timely and thoughtful updates, right? Quarterly updates. It's what people should be doing. They should be filing their annual report every year with their updated financials, just so people know what's going on with the business. And folks aren't doing that. Limited returns. I think a lot of people, even if they thought 5 years, they didn't think 10 or 15, or maybe they thought conceptually they understood that. But now that they're 7 years into holding something, you're like, when can I get rid of this thing? So people want to see liquidity and they want to see exits. And then lastly is that restricted liquidity. So we need to see a secondary market where people have the opportunity to get into and out of these investment opportunities. So just to give you a sense of where the challenges are, right? In terms of dollars raised, folks who were raising up to a $1.24 million Reg CF shot to raise $1.4 billion historically, and to date have only raised about $413 million. So they've only hit about 41% of their goal. Under Reg CF, they've shot to raise $8.5 billion, but they've only raised about $2 billion, so about 30% of their goal. And under Reg A, they've shot to raise about $13 billion, and they've only raised about 2.2, about 20% of their goal. All of this is to say is there's still a lot of capacity in the system that isn't being met by investor demand, and there's a question of how do we solve for that? And I do think there are major opportunities to do so. On the reporting compliance and investor updates, look, at the end of the day, if people are going to continue to invest in these markets, they need to know they can trust the market, right? And one of those key pieces comes after a raise. And we just see far too lower rates of people, A, providing their annual reports, which are legally required by the SEC, and B, providing general investor updates. And I think we need to see a lot more of that. We are building tools at KingsCrowd to help with that, but we need more people just buying in and doing the right thing for investors. And then there are just mechanical pieces of this industry, right? Like, I'll give you an example. When you invest in a company and they IPO, and your shares will be with the transfer agent, like computer shares, you may have heard of them. And then you have to move those shares into your brokerage account to actually sell them. And there are fees associated with that. And typically you're getting a piece of mail, and it can take days or weeks to get access to your shares. And then the share price could be wherever by that time, right? And people don't know how to get them into their brokerage account. So there's mechanics around, once you have an opportunity for a return, you actually need to be able to get that return. We need to create more seamless processes around that, because we hear a lot of friction and pain points with that for investors. And then let's talk about the liquidity part, right? So I thought this was the best way to hit on it. At the end of the day, there's been 6,200 unique companies that have raised in this market. There's been over 10,000 raises, but many of them are follow-on raises, right? We've only had 95 mergers and acquisitions. We've had about 500 plus failures. We've had 38 IPOs. Now, first off, that 560 number is exceptionally good from my perspective. If you look at the 5-year survival rate of companies in the United States, it's like 90% fail. It's a very high rate. So the fact that we're around an 8 to 10% mark is like really, really good. But only 2 to 3% of companies have returned yet, right? So we are still in the very early days. And if we want velocity in this market, people need to start to get their money back so that they can reinvest into the market. So there's a lot of work that needs to be done there. So where are the opportunities for growth going forward? We see more liquidity, right? We need standardized secondary markets that work for people. We need mainstream, streamlined ways of people being able to sell their shares when there are IPOs. We need more transparency around secondary markets so people know what they're buying into and out of when they're doing it. We need more returns, and that just takes time, right? That one is like not a hard problem to solve. It's wait long enough and you'll see the returns come along. If you think about it, really the bulk of companies starting to raise in this market came around 5 years ago. So we're only 5 years into the meaningful window of companies that have raised money. So I'm thinking another 5 to 10 years from now, it'll become very consistent that you're seeing, fairly decent returns come about, but it's going to take time. But as more of those stories come out and people go, oh my God, this is real, then I think we're not only going to see more people redeploying capital into the market, we're going to see more new people coming in saying, wait a second, I can actually make money here. We need better access. So I always say we need to get these opportunities where people are already at, right? The idea that you have to go to 50, 100 unique marketplaces, find them online and make individual investments, it's actually a crazy concept. Like that's the idea of like you have to go to like Google to invest in Google shares and Facebook to invest in Facebook shares. You just wouldn't do it, right? And I do think there's going to be a future where you open up your brokerage account, your SoFi, your Robinhood, your Charles Schwab, and you find these investment opportunities alongside public equities. And I think that's the real mainstreaming of this asset class. Now you say, hey, that's a pretty crazy idea. I don't see that happening. I think we're starting to see the first steps of that actually happening. SoFi, right, which is one of the largest brokerages out there now, has actually started offering access to the Fundrise late stage venture fund and the Sweater Ventures non-accredited venture fund. So they're offering access to alts directly within their brokerage account. Now they're diversified products because they're venture funds, but I think it's the next step towards getting to individual deal flow. Where do I think that plays out? Somewhere in the 5 to 10 year range. I don't think it's an overnight thing, but we're seeing more and more folks like Vlad Tenev at Robinhood talking about the need to offer access to alts and private markets. It is coming. And then we need more deal flow. And when I say more deal flow, I don't even necessarily mean number of deals. I mean quality and type of issuers. So we talk a lot about raising the caps on Reg CF and Reg A, right? And the naysayers will say, hey, why would you do that? People aren't even raising nearly how much they're shooting. But it's not about the companies that are trying to raise right now. It's about the companies that would say, hey, I would do this if. We hear a lot of companies, 5 million is not enough. I can't do a real Series A with that. But if you could do 10 million, I'd be interested. So I think what we're going to see is as we raise those caps, more companies will be willing to come into the space. We saw when the 5 million cap happened, right? That's when the Mercuries of the world and the Substacks of the world said, hey, okay, this is real and legitimate. I think when we see that cap raise again, we could see that happen again as well. And then, end of the day, we need more time, right? We're 10 years in. And by the way, I think for 10 years in, it's actually pretty impressive. $5.3 billion deployed. Over 6,000 unique companies have raised money. 2.9 million individual investors have made investments in this market. And it's probably well over 3 because not everyone reports. And look at those figures at the bottom. 25.7% of the companies backed have been female founded. 24.5% have been minority founded. We know that the venture ecosystem has pretty much completely failed this group of folks, continue to fail them, and are systemically broken to the point of never being able to solve it, clearly, after 20 years of trying. This market provides an opportunity to start solving some of these capital stack problems in the private markets. We've come an incredibly long way. I think there's a lot to be very, very proud of and an incredible amount of opportunity ahead to really grow the industry. Thank you.